All right, let's get right into it. Today was all about the AI reckoning. A new weapon just hit the scene, and it triggered an absolute bloodbath in the software world. So the market gave back a pretty big chunk of yesterday's rally. You can see the S&P 500 slipped as that geopolitical gravity kind of pulled everything back down to earth. The Dow was right there with it, ticking down. And the reason why is pretty clear. Those hopes for a quick de-escalation in the Middle East, yeah, they started to fade. And with oil jumping back over $100 a barrel, those nasty stagflation fears, that toxic mix of high inflation and slow growth, they just crept right back into the driver's seat. But look at this, the tech-heavy NASDAQ. It took the hardest hit of them all, sinking almost a full percent. And this really sets the stage for our deep dive today, because the real story is all about a ruthless turf war that's unfolding in the world of tech. And that brings us to our main character for the day, the heavyweight champion of cloud computing, Amazon. They just made a move that sent absolute shockwaves through the entire enterprise software market. Now, you'll see Amazon stock actually dipped a bit on those broader market fears, but don't let that fool you. The company completely dominated the news cycle for a very different and much, much more aggressive reason.
And here is that reason. Amazon, along with its AI partner Anthropic, just shook the entire industry. They rolled out a new weapon, an AI assistant that can literally take control of a computer to complete tasks for you. The market immediately saw this for what it is, a direct declaration of war on legacy software companies. The key here, the really crucial point, is that by bundling these autonomous AI tools right into its cloud services, Amazon is trying to completely cannibalize the budgets that companies used to spend on all those standalone software subscriptions.
So let's talk about the first major casualty in this war. Salesforce, the pioneer of cloud-based CRM software. Oof. Salesforce took a painful tumble, dropping over 6%. And this was clearly from massive institutional selling. This wasn't just a little dip, folks. This was a violent, immediate reaction to the news coming out of Amazon's camp. So why the panic? Well, investors are suddenly terrified that these new autonomous AI agents are going to completely gut the need for expensive, traditional software as a service seats. I mean, think about it. If an AI can just operate across all your platforms, why would you keep paying for hundreds of individual user licenses? This has triggered a violent reevaluation of what a safe software business model even looks like anymore. It's just a brutal lesson. In the age of AI, yesterday's competitive moat can literally just evaporate overnight. Now, while all the software stocks were fighting for their lives against AI, the biotech space was dealing with a totally different kind of drama, a brutal and frankly self-inflicted regulatory slapdown. And here you go, ImmunityBio absolutely cratered, plunging over 21%. What's worse is that this completely snapped a massive multi-month rally. It was a devastating blow to investor confidence, and it just goes to show you how fast sentiment can turn on a dime in this sector. The driver here was a costly, unforced error. The company got a very stark, very public warning letter from the FDA. The charge? They said a TV ad and a podcast for their cancer therapy were false or misleading. Now, in biotech, a company's story and its credibility are just as important as its clinical data. So getting on the wrong side of the FDA with your marketing, that is a massive red flag. It just shatters institutional trust and triggers immediate no-questions-asked selling. Okay, so that's the play-by-play. Now let's get you ready for tomorrow. Here is exactly what you need to say to sound incredibly sharp when you're talking about the markets. When Amazon comes up, here's your line. Amazon pushing out these new autonomous AI tools isn't just a product update. It's a declaration of war on the traditional software sector. If AWS can natively bundle capabilities that companies used to pay separate SaaS vendors for, it fundamentally changes corporate IT budgets. On Salesforce, here's the take. Salesforce dropping over 6% is a massive wake-up call for legacy SaaS. The market is seriously questioning whether businesses will keep paying premium subscription fees per seat when cloud giants are rolling out AI agents that can do the heavy lifting across platforms. And for that biotech blow-up, you'll say this. That 21% plunge in ImmunityBio is a textbook example of an unforced regulatory error. Getting slapped with an FDA advertising warning completely shatters institutional trust. Compliance and management execution are just as critical as the clinical trial data. So I've got to ask you, With Amazon's new autonomous AI agents sending this shockwave through legacy SaaS companies like Salesforce, do you think standalone software subscriptions are dead? Or is this sell-off just a massive overreaction?
Let me know what you think. Comment below, and be sure to subscribe to Market Fluency for your daily edge.